Good morning, everybody. This is Brandon with the Trader Forum. Back here to make another trade recap video from the morning of January 4th, 2023. I primarily trade the futures, ES and NQ, and I'm going to go over why I scour the chart for relative equal levels and how I use divergence to help me to help provide a signal as to where I believe the market's going to draw. Before I get started, I just want to say I primarily trade ICT Principles, the Inner Circle Trader. You can find him on YouTube. This is not my teachings. Again, I use a little bit of a variation, and I've kind of done some of my own stuff, but primarily speaking, these are his principles, his teachings. He has a lot of videos on YouTube. The 2022 mentorship I highly recommend. It has completely changed my trading and just helped me have a lot of success. So without further ado, let's get going here. So one thing I want to take a look at first is I work from the top down. I like to look at the weekly, the daily, and then I get into intraday. Sometimes I'll look at the monthly, but primarily I'm going to look at the weekly and the daily and then before intraday. And what you'll notice here is this is last week, the week of 12/26, the last week of 2022. The high was 3,950. ES took out that high yesterday, the first trading day of 2023, and made a new high of 3906.75. At the same time that happened, NQ, whose high last week was 11,183.75, did not make a new high and reversed course at 11,182. So now we have relative equal levels on NQ. However, we also created bullish divergence there. So when I saw the bullish divergence yesterday, I instantly started thinking, okay, well, NQ did not take out last week's highs. It's going to grab liquidity. Where is it going to grab liquidity? It's going to grab liquidity at the lows from Friday from 12:30. And sure enough, that's what we did. We went outside day, we grabbed that liquidity, then we started to move back in the range. When I see that, I'm not expecting a continuation day today with how we closed back up in the range. I was more expecting an inside day, which is what we're getting, and NQ continues to hold this 60-minute fair value gap that it's held for the last 3 days. But we're not really going to pay too much attention to that today. My primary reason for showing you this is I was bearish in nature because NQ did not take out last week's highs, while ES did. So I'm thinking bearish sentiment. So let's move over here to my trade screen. This is my primary trade screen. I have ES 5-minute upper left, ES 1-minute upper right, NQ 5-minute lower left, NQ 1-minute lower right. This is what I trade off of right here. So what I want to do is I want to draw your attention. So the first thing that I did this morning is I came in and I said, okay, what's going on here? And my eyes immediately went right here. So again, I'm bearish sentiment, and I see a double bottom or a relative equal low right here on NQ at 10,972.75. And it just so happened to be to the tick on both, which is more commonly occurs on ES. You'll have double tops or double bottoms to the tick on ES. It's fairly rare on NQ as it can tend to be a little bit more volatile. The important part here, though, for me, is that this secondary low that occurred at 750 did not take out the low at 540. It did not make a lower low. Yes, it just so happened to double bottom to the tick, but if it would have come down here and made a lower low, I would not have been focusing on it, because to me that is a liquidity grab. That is, we're going to stop out anybody that's long that has their stop loss below here and then move back up. The fact that it did not make a lower low is the most important point for me. So I instantly draw that out on my chart. So then what I start to notice is here's the high of day on NQ, and here's the high of day the current high of day at this moment on ES. So when I get to my screen at about 8 o'clock this morning, we're starting to move back up. This had just kind of been set up and we're starting to move back up. So we're grabbing liquidity on NQ above here, and then on ES you can kind of see you got this downward line, and I'm sure there's 100 people that were drawing this downtrend and playing this break. For me, what I noticed is ES came up here, took out the high of day and made a new high. NQ failed to do that. So as I mentioned, we already have bearish divergence on the weekly because NQ did not take out last week's highs while ES did. Now we also have bearish divergence on the daily because NQ did not take out today's highs while ES did. So now everything is pointing me to say, okay, we have relative equal low down here at 10,972.75. We have bearish divergence on the weekly. We have bearish divergence on the daily. I'm looking for a short entry, and I'm going to put my stop right above high of day because to me, I'm trading that bearish divergence. And if that breaks, my thesis was wrong. Yes, it could take out the high and then reverse and then go back out and take out the low, and at which point I could get back in. But I'm going to limit my loss because if NQ breaks high of day, my bearish divergence thesis was wrong. So what it does, so when it comes back here and fails to take out the high of day, what I start doing then is I start looking for an entry on NQ. And that's when I will come over to the 1 minute chart. And let me try to zoom in here a little bit so you guys can see what I'm doing. I apologize about that. So I come over here and I look on the 1 minute chart. And this candle right here at 826 was a tell to me. So we failed to make a new high, which the high of day is up here at 11,051. We failed to make a new high. We try to push higher right here at 824. We kind of stall at 825, and then at 826 we get a pretty significant 13-point move down. Now this is pre-market, so again the volatility is not there, but that's a pretty significant candle to me. That means to me this candle right here at 824 was a bearish order block. So this was people getting short, or the algos getting short, however you want to describe it, and you could have looked for a short right here at about this 11,042 spot. And as you can see, it came up and ticked it here at 827, came back and ticked it again at 832. However, it's pre-market. I'm not in any big hurry. I waited for a little bit more confirmation. I see that it's rejecting that bearish order block, and then we get this 1 minute fair value gap. So this was my entry right here, 11,034. Was my first entry. I actually did have a secondary entry sitting up above this high at 11, or this interim high at 11,042. I had another entry sitting up there. You'll see in a second that it just barely missed my second entry at the open. But so here we go. We get this fair value gap, and then we start to get this move back down. And as you can see, I'm going to try to do this to where y'all can see what I'm doing here. So we start to get the move down. I was personally hoping that we were going to get far enough down into this range before the open that I could move my stop to break even, with the expectation that we were going to take out this low before we got back into these highs. Unfortunately, that didn't happen. So what I ended up doing, as you can see here, here's my trade executions. So here's my entry, as I mentioned, at 11,034. When it re-entered back into this 1 minute fair value gap that's right here. I took off a partial down at this pivot just to lock in profits. That's the way I like to trade. I like to lock in profits. Had this continued down a little farther, then I would have moved my stop to break even. The fact that it didn't do that, I actually put the partial I took off back on up here. So here we go, it kind of chopped sideways before the open. I'm still very confident that we are heading down to 10,972 and that relative equal low. and that pool of liquidity that's just sitting under there. The algos, in my opinion, are designed to draw to that. They know anybody that's long is sitting below that pool of liquidity, or is sitting below those lows, because everybody's read, oh, it's a double top, or I'm sorry, it's a double bottom, it's a double bottom, put your stop below there, blah, 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 blah. Well, the algos are designed to come and grab that liquidity. So back to my trade execution, I put my partial back on here at the open. We get an instant move down, and as I mentioned, it just barely missed my second entry. I think it missed it by less than 2 points, which was kind of a bummer, but hey, I'm not going to be upset about that. It's still a great trade. Took off the partial again down here, and then you can see my final exit down here at the relative equal levels of 10,972. So just wanted to briefly share. This is probably the first thing I do every morning, is look for relative equal levels on the chart, because I believe that is the market cheat code. Price is going to draw to those relative equal levels. Again, the key for me is if it's at a high, it doesn't take out the high, and if it's at a low, it doesn't take out the previous low. I want to see that it left liquidity intact. I want to see that there is a lot of people that have their stops that are looking at it and going, oh yeah, it held this level twice, like we're moving now, and there's just a bunch of stops sitting down in there. That's the key to trading the relative equal levels. So as you can see here, it entered, and as I went over it on the trade execution, it entered this fair value gap, it re-entered it again, we came down here, we took out this relative equal level, she's gone. And then this is the second part of the trade. You could have instantly flipped your bias and said, okay, well, NQ just took out that relative equal level at 10,972, and the same level on ES that was created at 750, 751 was not taken out. In addition, when the market opened, before it took out this level, it double topped to the tick on ES and then made the move down. So now we have the bearish divergence signaled us. The bearish divergence on NQ by not taking out the high of day signaled to us, yeah, we're going to take out this relative low. Now we have a relative high, a relative equal high on ES, and we've got bullish divergence. So now, what do? We come down here and grab this liquidity. Anybody that got short up here, or anybody that got short in here and has their stop up here, it's coming for you, and here was your clue. We didn't take out the same pivot on ES that we took out on NQ. We grab all these longs down here on ES, or I'm sorry, on NQ. We stop them out. We flip the script. We go back and break the 930 highs on NQ, stop out anybody that was short QQQ and had their stop above the 930 highs, and then we come back here and stop all the shorts out on ES as well. Then what do? We have bearish divergence again. Because now, yes, NQ took out the 930 highs, but it did not take out the high of day. So what do? We come right back down again and take out the 930 lows. So this morning was a fantastic lesson on how to trade both markets at the same time, how to use divergence on both markets to get into trades, or to give you a clue or a signal that, hey, we're going to go take out these relative equal levels. So just a fun, a lot of people will call this chop. To me, this is beautiful stuff. We are just stopping people out left and right. If you were long, you got stopped out. If you were short, you got stopped out. If you were long again, you got stopped out. relative equal levels on ES and NQ is a cheat code. Start scouring your charts for them. Keep them marked. So one thing to keep in mind as well is, so now we came down here. We didn't have divergence, but both NQ and ES took out the lows, today's lows, and then moved back up. And look, NQ has taken out those highs from this morning. ES has taken out those highs from this morning. Keep the highs on, keep the relative equal highs from the daily chart marked on NQ. Eventually we are going to come for them. If this is true weekly bearish divergence, we will take out last week's lows before we move back up and take these out. However, don't guess, don't instantly think that we're going to get that, because we have taken, yesterday we had a huge liquidity grab below here. Now this is the third time we're holding this zone. Let price tell you what it's going to do. We got the bearish divergence on the weekly / the daily. We took out yesterday's lows. They're good. However, we still have that divergence on the weekly, but my point is don't just assume that we're going to go take out the lows. Let price tell you what it's going to do. We're holding this zone currently on NQ, and then I believe we are holding a corresponding zone of the 3900 area on ES. So we are trading in a range right now. When we're trading in a range, all they're doing is stopping people out. Hopefully this video was helpful for you all. If you have any questions, feel free to comment and ask. You can also, I'll put a link below, you can join the free Trader Forum Discord. We have a small group right now, but we focus on the futures, equity swings. We'll short some stuff as well. It's just a nice place for people, like-minded traders, to come together, have discussions. There's no one system to this. You can make anything work for you as long as you understand the principles of liquidity in the market, in my opinion. So hopefully this was helpful. I hope you all enjoyed it, and I look forward to hearing from you. Take care.